Making the market easier to understand. Hi, I'm Phil Grandy. I've been doing that for folks like you for 50 years. I'm going to do it again today, but please hit your subscribe button. I'd really appreciate it. Okay, so let's talk about this rally. So again, what started this rally was a letter of intent, not a contract. Most people don't understand that. And letter of intents are papered through bathrooms all over corporations. They're worthless. So if they don't get from the letter of intent to a solid contract, this market can collapse. Also, what they're not talking about is the labor market's getting worse and worse. The labor market is our economy. It's our stock market. When you got the labor market right now, think about this. The hiring rate, the job opening rate, and the quit rate are all below where they were during COVID. That's horrible. That could take the market down. And don't forget, layoffs have already surged in the last 12 months, 205%, but nobody's talking about that. The tourist traders, they're the ones that are moving the market. And those are the last people we want to depend on because they buy by emotion. They always get in late. They always chase these rallies. Why? Because they get angry that they missed the rally, and they get angry. Everybody else is making money except them, so they jump in, they get right in at the peak. So it seems like the market's doing great, but it's loaded up with tourist traders. Now, take a look at the chart. Can the rally keep going up, and can we hit the peak up here? Sure. All Trump's got to do is keep on telling us every day that he's got another country that he signed an agreement with, and it'll go up because people go crazy with that. But it's not sustainable because of the things that I just told you about. What you got to focus on now is the 200-day moving average. See it over here? If that 200-day moving average, see how we broke up through it? Now, if that, let me put it up on the spiders here for you, be easier. See how we broke up through that 200-day moving average? Remember, we were stuck underneath it until all of a sudden that announcement. Then it broke above it. But if it breaks back down through that 200-day moving average, then you're going to see a lot of selling coming. That's right. Tons of selling will come in. So, again, be careful. This is an opportunity to sell into the stocks that you bought prior to this rally. So don't depend on these tourists to keep buying these stocks. Anything can spook them. Remember, the institutions aren't doing the buying. The Europeans that buy 48% of our stocks aren't doing the buying. And a lot of this rally is short covering. So while it's a rally, we'll benefit from it, but be cautious. Okay, so for more information, again, just comment on the word stock below. And remember, 10 days free. You get to use my Pro 2 color-coded chart, too. All right, that's it for today. I'll be here every Wednesday at the same time.